Hey guys, Stock Saturday, and it's a bit of a quiet week. Not too much movement in the markets from the looks of it. My portfolio is dead flat, surprisingly. Not a lot of transactions at all. Not spent my cash. Still sort of considering maybe withdrawing a fair amount of that and putting that into crypto with the drop. But yeah, so that still sits at £10,000, and yeah, the invest account and the ISA pretty much stayed the same. So may as well look at a bit of news. I didn't really highlight Volkswagen's earnings when they came out, so I thought have a quick look at them. This seems to be broadly similar to Stellantis's revenue and sales update. Stellantis didn't do a full earnings. Volkswagen do, but yeah, it largely seems to be sort of number of cars sold down and revenue up, which is pretty good. But they do give a sort of breakdown into the specific countries. So you've got Europe down sort of 14%. Individual countries are sort of down more. Germany did a lot better than the others. And then sort of Central and Eastern Europe obviously is a lot worse because of Russia. Not a lot sold in Russia, which is for the best, I would have thought. And then Turkey down quite a lot. South Africa sort of pretty much flat. North America sort of doing reasonably well, down 17%, so nearly as good as Europe. South America down 15%, and Asia Pacific only 6.7% down. So that was largely China, but yeah, only 7.5% down. I thought was pretty good. And then they do go into sort of each individual car, and yeah, you can see sort of almost everything is down, even including Audi. But then what is up? Lamborghini is up, Bentley is up, and Porsche is up, which just sort of reminds you the rich get richer. I thought that was a little bit sort of, a little bit funny. And yeah, Bugatti basically stopped selling this year, so they may have a new car on the horizon. But yeah, certainly not. Don't seem to be going electric anytime soon. Yeah, and they sort of give you their sales revenue and then operating profit for each sort of section of Volkswagen. So you've got sort of the main passenger cars. They sort of group Skoda, Seat, and that sort of thing together. And yeah, that largely seems to be sort of shipments slightly down, not down too much. Skoda actually did a bit better. Seat and the commercial vehicle side sort of a little bit down. But volume sort of increasing, similar to Stellantis. So yeah, that's not too bad. Sort of as expected. And the profit side, obviously last year was sort of a bit of a rough year, so the profit side is sort of way up. Volkswagen themselves operating profit is up over 100%. Skoda actually down slightly. Seat sort of breaking even pretty much. But the commercial vehicle side sort of had a bit of a poor year, and it's sort of up, yeah, 700%. So yeah, looking at the Audi premium group, same again pretty much. Sort of revenue up slightly on slightly declining sales, and yeah, profit up 50%, which is good. Porsche actually sold more than last year, so that's pretty good. The electric vehicle side is doing well. The Taycan, and yeah, so volume up, sort of 20% nearly, and yeah, profit up, sort of 30-40%. So very nice. The commercial vehicle side, because they took on a new brand, which Navistar, I believe. So their shipments are up, including that, and yeah, revenue up quite a lot from that, and profit up 100%. So very nice. And they break down some of their smaller elements there, and then Volkswagen Financial Services, which is up ever so slightly, but profit up from last year as well. So yeah, overall, I thought pretty good. On the tech side of things, though, we are seeing a hell of a lot of layoffs. I noticed this is kind of positive, it seems, for the stocks. Very unfortunate for the people that are getting laid off. But somebody shared this picture, and it is sort of being updated weekly from the looks of it. I saw a screenshot of it as of the 10th of November. This is the 14th, so includes 2 rounds actually from Twitter, you see. Meta in the middle, sort of 10,000. Everyone seems to be doing 10,000 employees. I think Amazon have just announced they're probably laying off 10,000 employees. I think if you add the two up from Twitter, you're sort of getting towards 10,000 employees. So this is on a monthly basis. So sort of 20 up to 35,000 layoffs a month in the tech industry, which is a real shame. And it is all manner of companies in there. You can sort of see the smaller stuff: Peloton, Crypto.com, DocuSign, Shopify, and all the sort of a lot of the unprofitable tech that you would expect to be struggling in this market. A lot of them rely on sort of advertising revenue, and that's down. So yeah, they're not doing too well. Even Tesla, the unstoppable, untouchable Tesla, having a layoff. So yeah, not very good, but could be a sign of sort of potentially inflation coming down and money printing not too far away. Maybe a sort of pause in the interest rate hikes. Not a cut, as I say, but maybe potentially a pause in, if not the next meeting, maybe the, I can't remember if it's January or early February meeting. So, yeah, potential there. And I've been looking at the house builder stocks. So I've got Taylor Wimpey and Barratt, which are from the portfolio in quite a significant loss. Barratt at sort of £1,200 and Taylor Wimpey at about 1,050. So yeah, sort of £2,300 loss on those two. And sort of talking to a couple of guys on the Discord. If you're not on Paul Briscoe's Discord, certainly join up there. It's a great place to sort of share like-minded views and discuss. I'm a mod on there. And yeah, I was talking to the Jackal, and he sort of suggested maybe taking a tax loss on those, as they're in my invest account on Trading212. So I could potentially sort of take a tax loss on those two, £2,300 loss, to sort of offset some of my gains, and put that into, say, Redrow, or I was thinking maybe Persimmon, but I've had second thoughts about Persimmon. Maybe put it into Redrow for about a month, and then that sort of locks in that loss, and then I could put it back into Taylor Wimpey and Barratt. And sort of being, all the housing market seems to be sort of dragging these stocks up and down in unison pretty much. I wouldn't expect Redrow, Taylor Wimpey and Barratt to sort of diverge all that much from each other. So I would expect to be able to get pretty much the same number of shares of each back after a month. And yeah, then I've locked in that loss rather than just sort of waiting for, if I wait for them to, rise back up again, then I haven't sort of made the most of that loss. Because I do get a reasonable tax bill every year. So yeah, that seems to make sense. I probably should have done it when they were a bit lower down. Taylor Wimpey sort of went into the 90s, I believe, maybe even the high 80s, and yeah, it's now sort of £1.04. But yeah, I think from looking at it, it does seem like Redrow is maybe the one to go for. As I say, only to hold for a month and then switch back. But yeah, they're all sort of cutting profit forecasts and dividend cuts for some of them. You can see, so Red Row sort of were forecasting, or the analysts were forecasting 93p, and they're now all the way down to just over 70p. But similar to Taylor Wimpey and Barrett, they are sort of quite heavily net cash, so sort of enterprise value of 1.25 billion. Not as big a cash pile, of course, but less debt. And yeah, just sort of seems a reasonable stock. You got Persimmon do still seem to be sort of a little bit overvalued, sort of on a book value basis, which a lot of people would use for house builders. They're still a little bit overvalued compared to the others, and they just had to cut this. I think they've announced cutting the dividend, so yeah, 17.7%. It was obviously not going to happen on falling revenues and falling earnings. They're now sort of predicting what was 242 pence, it's now 167 pence. So yeah, the 235p dividend was not going to be sustainable. I think anybody sort of looking, hoping for these and sort of using very much lagging indicators of dividend yield and that sort of thing is sort of kidding themselves a little bit, and you maybe need to look a little bit more forward, basically. So sort of the dividend comes from profit, so you want to see where profit is going before the dividend gets cut. Obviously this everyone else does largely do that, the institutions do, so this has been sort of falling down to where it is, probably in anticipation of that dividend getting cut and the sort of falling earnings. But you do still see a lot of people saying, do we buy Persimmon? It's at 17% dividend, and yeah, that's a bit of a shame. So yeah, that is sort of pretty much the portfolio for the week. Not a huge amount of moves. The sort of tech stocks are coming down slightly, considering doing this profit take with the house builders. One stock that has sort of offset those small losses everywhere else is Taiwan Semiconductor. So it's come out that Berkshire Hathaway, Warren Buffett, has bought, I believe, about $4 billion worth of Taiwan Semiconductor. Not really sort of read through if he's sort of given his thesis on exactly why he's bought that, but yeah, we agree on it, obviously, and that's sort of rocketed up on the news. I think his stake has already gone from sort of 4 billion to 5 billion, and he may not have even paid 4 billion for it, because this is sort of last quarter, I presume. So yeah, that was some nice news. Not really a stock that I want to be sort of that keen on buying at the moment anymore. It was sort of at it was at the low 60s and maybe even sort of touching $60. So this is in pounds, actually. I need to put that in dollars. But yeah, that's a nice sort of gain to offset some of the red. So yeah, that's the invest account. The ISA's not really moved at all. Still got the Sylvania dividend coming in a couple of weeks. Not entirely sure what I'm going to be spending that on. Could be a speculative bet on Silvergate Capital, the sort of crypto-focused bank. Seem to be going through a rough spot at the moment, but still making a hell of a lot of profit. So that was good. The IG account, not really a huge amount of move here. Argo down for the week, but no surprise there. And yeah, the Chinese tech, sort of not a huge move in there. Sort of they've been coming up a little and sort of dropped on a little bit more COVID news. So yeah, fair enough. Could do actually a tax loss harvest on these. So there's $1,600 in these two, but it's less of a sort of they don't really go up and down in parallel. The only thing I would want to sort of sell these two and buy really is Tencent, and they sort of go up on their own. So yeah, swapping these for 10 cent for a month and then swapping back, may not be in the same position I was. So let me know if you think that switch is worth it. But yeah, that's the portfolio for the week. Yeah, let me know what you guys are buying. If anything sort of big has happened to your portfolio, as I say, not a lot's happened to mine. And like and subscribe. See you soon.